Let's go to chapter 17. Because we have only 2 hours, so I just want to give you the basic, brief ideas about investment. Chapter 17. 投资 because it is a quite rare, it's very common assets the company have, but we didn't cover this content so much. Okay, so investment 投资 is quite special. Why? Because investment for this part, we will use fair value principle a lot. For previous chapters, when we talk about assets, usually we use cost principle 成本原则, but for this chapter, investment is quite special. So in investment, this chapter, we use fair value principle a lot. Why? Because if you still remember why accounting we use cost principle a lot, when we don't know fair value, we don't trust fair value. That's why we use cost principle. So for like your PP, like your inventory, for your other assets, we use cost principle a lot. Why? Because we don't trust fair value. Then we decide to choose cost principle for reliability. 可靠 Reliability 可靠 means what? The number, no doubt, because cost is the true number. How much? No doubt. You ask anyone how much money you spent to buy your PP, how much money you spent to buy your inventory. That's the true number. So we choose reliability. Then we will use cost principle. But what's the problem? Even though cost is the true number, but maybe the number is 10 years ago's number, 5 years ago's number. So the problem is maybe the number, the data is too old because we're based on the cost, right? It's true number, but maybe the data, the number is too old. True or maybe is 10 years ago, maybe, or 5 years ago, maybe. Okay? But because we don't trust fair value, market value, that's why we decide to be more conservative. Okay? 比较保守. This chapter, why we can use fair value principle a lot? Because we can get the market value. Okay? Because investment, this kind of assets are traded on the market. So it's easier to get the market value. That's why we use fair value principles. It's more relevance. Relevance. 有关性. Relevance 有关性 means what? It's about today's data. Okay, so the data is for current period. It's helpful for you to make the decision today. Okay, then in this chapter we can use it because it's easier for us to get the market value. Investment is easier for us to get the market value. Why? Because they are traded in the market. Okay. So you will find out investment is special, is different from other assets because it's easier to get the market value. That's why accounting, we will use allowed company to use fair value principle. Okay. So for investment, your company could use your money trying to make more money, right? So usually we have a two major investment. What's that? Bonds, shares, right? So you need the money, you could issue the bond. You need the money, you could issue the shares. So the same upper this side investment. Today you are not the company who need the money. You are the guy, investors. You have more money. You want to use the money, make more money, right? So also you can buy the bond. So you do the debt investment. You can buy the shares. So that's equity investment. Okay. So we talk about these two major investments. So, investment in debt securities, investment in equity securities. Okay, so we talk about you are investors. So you can buy the bond, you can buy the shares, but don't forget, bond shares they are what? They are financial instrument. 金融工具. So you should understand what does it mean, financial instruments. We repeat a lot. It's always about the contract, right? So two parties, two sides, they made a contract. So you are the person, the company, you need the money. You will make a contract to promise something, right? Also, investors, they will get a contract. The contract will about what? Their right. So financial assets means what? The contract about your right. You have right from debtors, from issue companies, right? So you got the right. So did you find out? Today you don't make the promises. Today you got the right from issuing companies. Okay? So financial instruments, 金融工具, actually, this is the contract. So the contract will tell you what's the deal the both sides made. And investment, of course, investment is your assets, right? Because you are the investors. You will get the right from issuing companies. Okay? So that's a basic idea. So chapter 7, we talk about some financial assets. What's that? Receivables. Like accounts receivables, notes receivables. Remember? If you remember, receivable still is a note, right? Note is the contract. So you will get the right from the contracts. Except that equity investment, 权益工具投资 means what? You use the money to buy the shares. Okay? Shares, still, this is the contract. So you can buy the shares or you can buy the bond. When you buy the bond, we call it debt investment. But no matter shares, no matter bonds, no matter notes, they are the contract. Okay, so on the contract, they will tell you any kind of right you will get. So bond, shares, they are the contract. Tell you what kind of right or what kind of promises they make. Okay. So for this chapter, for today, we just want to tell you when you buy the bond, when you buy the shares, accounting, our two major issues are classification and measurement. What does it mean, classification? Even though you buy the bond, accounting, we will classify it into three groups. Shares, we will classify them into two groups based on what kind of investment you made for accounting side. Okay, so how to determine we put it into which group? Then you have to think about it. What's your purpose? You do equity investment, you buy shares. You do debt investment, you buy bonds. So what's our purpose? We do investment. Of course, we want to use the money to make more money, right? So usually we want to earn a high rate of return, right? Use money to make more money. So what kind of money you can get when you buy the bond, when you buy the shares? Usually you can get the interest, right? When you buy the bond. You can get dividends when you buy the shares, right? So interest revenues, dividend revenues, there's the money you can get when you still hold the shares, hold the bond, when you still keep the shares, keep the bond, right? So when interest dividends is when that's for holding period, right? 持有期间 when you still keep the bond, when you still keep the shares, you can get interest and dividends. But don't forget, that's not the only money you want. What else? You want to sell it, right? To get what? The price difference. So the second money you want to get is capital gains, 资本利得, right? From what? From the price change. So you buy with a low price, sell it with a higher price. You can get the price difference. That's the capital gain you want to get, right? So when you sell it. Okay. So of course, two money we want to get when we do investment. We want to get interest dividend. Also, we want to get the capital gains. So there's most of cases why we do the investment. But for some case, company maybe do the investment for strategic consideration. So strategic consideration only when your company do equity investments. Okay, so only when your company do equity investment. Why? When we talk about the shares, what's the first term you have? When we talk about the shares, what's the first term you have? Shares. Immediately, you have to think about what? Ownership. So every time when we talk about the shares, you have to think about the ownership because they will determine your power in the company because shares, you will become their shareholders, the boss in the company, right? So when we talk about the equity, you have to think about the ownership. 所有权. So why, if you didn't want to make the dividends, you didn't want to get capital gains, another reason for strategic consideration. So what does it mean? You want to get the ownership. So why you want to get the ownership? Because you want to control the other company or you want to affect, influence other companies. Okay? So you want to control or affect, influence other company. So for that kind of reason, they still, you will try to buy the shares, buy other company shares. Okay, based on different reasons. So they say the motivation, incentive, why you buy the shares, why you buy the bond, right? Accounting, we will base on your motivation, your incentive to determine what kind of accounting method we are going to use. Okay, and which number, what's the number we are going to report on financial statements. So if you understand accounting, you will know that incentive, motivation is very important for accounting to determine accounting methods. Okay, so that's why how to measure your investment. Maybe we can use fair value principle or we use cost principle. Remember, most of assets we use cost principle. Some assets we use fair value principles. Even though it's easier to get fair value is important, but one very criterion, one very important factor to determine which method we are going to use for investment is what? Depends on circumstances. So what does it mean? Your motivation, incentive to do this kind of investment. Okay? So holding intention. So means what? We will determine, depends on incentive, motivation of investment. Why you do this kind of investment? Because you have different kind of incentive, motivation, like what we've mentioned here, right? What's your incentive motivation? Maybe you want to get interest, dividends. Maybe you want to get capital gain. Maybe for strategic consideration, right? Depends on different motivation, incentive. They will affect accounting, which method we are going to use, fair value principle or cost principle, okay? So what does it mean, cost principle? Remember that? If we decide to use cost principle, then how to get the numbers, okay? For bond, remember? Bond, how could we get the number for your bond? In the beginning, present value, right? So, present value, market value, then if you do installment payment 分期付款, so don't forget, installment payment 分期付款 means what? Each period you have to pay the some money back, right? So they will make liability. The bond's value decrease, right? So if your company do some installment payment 分期付款, so you have, not you, you are investor. So the other company, issuing company, have to pay some principal. Okay, so which will make the bond's value decrease. And don't forget, the others for bonds always we use what? Effective interest method, right? So we will use effective interest method to do discount or premium amortization. So they will affect our bonds value, right? Okay. So far for chapter 14, when we talk about bonds, that's how we find out our bonds value, right? Our bonds book value. But here, did you find out impairment loss? Because this chapter we talk about what? Assets. So this chapter we talk about investment is assets. If you remember, for any kind of assets, what should we do? Before we prepare financial statements, always we have to do impairment loss to figure out some part of your assets. Maybe they got impaired, so we cannot recognize, recall it as assets, right? So for assets, always we have to do impairment loss. So impairment test, remember that? 减损测试. For example, accounts receivables, these are assets, right? So for example, receivables, which method we use? Receivables, which method we use? Allowance method, 被抵法, right? How about inventory, which method we use? Remember? LCNRV. How about PPE, which method we use? Impairment test, right? Okay. So did you find out? So still the same for investment. These are assets. So still we have to do this kind of things. So remember, impairment loss only for assets because we are so conservative. For assets, we don't want to overstate assets. So that's why this part only for assets, not for liabilities. Okay, so that's cost principle. Here, just to let you understand, even though we have different methods, but accounting actually, we have the same logic for everything. Okay, so that's cost principle, fair value principle, no problem, right? You just follow market value, fair value. So for cost principle, we do discount amortization, premium amortization to figure out our book value, right? For fair value principle, always we follow fair value, market value, okay? And for the change, fair value increase, fair value decrease, that will be our gain or loss, okay? So there's cost principle and fair value principles. No problem? Okay. So which method we are going to use? Cost principle or fair value principle? For investment, depends on your incentive, your motivation. So cost principle, what's your motivation, your incentive? What do you want? What? You only want interest from your bond. So you only want interest from your bond. You don't think about others, okay? So what kind of situation we use fair value principle? You want not only interest, dividends, also you want capital gain. Why? Capital gain means what? You try to get the gain during the market value increase, decrease, right? So let's go back here. Fair value increase $30. That's your capital gain. Fair value decrease $40. That's your capital loss.资本利得，资本损失。 Okay, so based on this, did you find out why we use fair value principle? Because when you try to get capital gain, how you can get capital gain? You want to get the gain during because of fair value, market value changes, right? So that's why your investment should follow the fair value because you're trying to get the gain during because of changing fair value. Okay, then how about we use oh, how about we use cost principle because you only want to get interest. So the market value changes. It doesn't matter for your company because you don't you don't tend to get the capital gain. Since you don't intend to get the capital gain, so the only thing you want to get is only the interest from the contract. So how the market value change, it doesn't matter for your company. Okay, so that's why it depends on your incentive. If you only want to get interest, no doubt we use cost principle because fair value, market value doesn't matter for your company. But when you try to get a capital gain, market value, fair value do matter for your company. Okay, so that's why we use fair value principle. Okay, so the logic is right here. Depends on your incentive. Then we use cost principle, fair value principle. That's why accounting right now we have two criteria, two tests to figure out your company's incentive motivation. We want to know your incentive motivation. Then we could decide cost principle or fair value principle. So what's your incentive? If your incentive, you only want to get contractual cash flow, contractual cash flow, 合约现金流量. So what does it mean? Contractual cash flow. The cash flow occurred only because of the contract. Contractual cash flow. The cash flow increase occurred only because of contract. So could you tell me what kind of cash flow because of the contract? What kind of money you can get because of the contract? Interest and principal. Okay, because on the contract, they only promise you pay the interest and the maturity date pay you principal. Okay, so it depends on you. You only want to get interest principal or you want to get capital gain. So if your incentive, your motivation is you want to get capital gain, which method, which principle we should use? Capital gain. Fair value principle, right? Because you want to get a capital gain means what? Means your investment depends on market value, fair value. So it's better to use fair value principle because they will describe your investment better. Okay? Then how about if your incentive is to get the cash flow interest principal from the contract? So which method we are going to use? Not yet. You have to go to step 2. Because so far we are not sure your incentive yet. We are not sure. So for contractual cash flow, even though you told me you want to get interest principal, but we still cannot determine your true incentive yet. So go to step 2. So what's the step 2? we want to make sure it's 100% or not. You told me you want to get contractual cash flow, you want to get interest and principal, right? Then we want to ask, is 100% or you still have other incentive, okay? So step 2 means what? Based on your incentive, you want to get incentive, you want to get interest and principal. Then we want to ask, is totally 100% or not? Okay, 100%. You only want to get interest principal, or you have other incentive. So only 100% or not. If you told me, okay, it's 100%, I just want principal and interest, I don't think about others, okay? So only is 100%. Then we can say, okay, is straight debt. You can use cost principle because 100% totally, you just want interest. And at the maturity date, you got principal. Others, you don't want to get. Okay, so you can use cost principle totally because you don't care market value, right? Like what? In the future, if you buy a house, you told me you want to live the house for your whole life. If you want to live your house for the whole life, so the house price increase or decrease, it doesn't matter for you, right? Because the house price increase, you won't sell it. The house price decrease, you won't sell it. So the house price doesn't matter for you. Why? Because you 100% you will live the house forever. Since you will live the house forever, you will not sell it. Since you will not sell it, then it doesn't matter what the price change, right? Okay. So if you base on these two, first, intend to collect contractual cash flow, okay? So this is your intention. You just want to get interest and principal. Two, you told me it's 100%. Okay? Only you meet these two criteria, then we can say you could use cost principle, okay? So you just want interest principal totally 100%. Then you can use cost principle, okay? So what kind of bond? What kind of bond meet these two criteria? What kind of bond? You told me 100% for interest and principal. What kind of bond? You will not sell it, right? So you will not sell it means what? You will keep the bond to maturity date, right? Okay. So only for this kind of bond, held to maturity 持有至到期日. Only for this kind of bond, held to maturity 持有至到期日, it meet the criteria 100% totally for interest and principal. Then only this kind of bond you could use cost principles. Others, you care about the fair value, market value. Still, you want to get the capital gain. So you have to use fair value principle. So for others, because you still want to get, maybe you want to get capital gain. So could you tell me what kind of bonds, except interest principle, you still want to get capital gain? Convertible bond. Why? Convertible bond, you want to get interest principal, right? But it's 100%? No. Why? Convertible means what? you still think in the future, maybe you have the chance to convert the bond into shares, right? Why you want to convert the bond into shares? Because you want to get more, not only interest and principal. Okay? So convertible here told you what? You want to get more, not only interest and principal. So convertible, you want to get more. Okay? Not only interest and principal. What else? What kind of bond? Any bond plus something means that's not 100%. What else? Callable bond. What does it mean? Callable bond. You will buy back the bond before maturity date, right? So before maturity date, you still want to get something more than interest and principals. So maybe callable bond. 可赎回债券 and so on and so on. So any bond with other conditions, any bond with other conditions means you want more. So we have to use fair value principles. Okay? So that's how we classify your bond. So cost principle only for held to maturity. Others fair value principle. So this is for bond. How about shares? If today we talk about equity investment, you buy the shares. So could you tell me, you buy the shares, which method we are going to use? Cost principle or fair value principle? Fair value principle. Buy shares. If in the future you do some investment, you buy TSMC shares, what you want? Most of cases, we want the share price, right? We want the share price increase to earn the capital gain. So for equity investment, always fair value principles, because they don't have contractual cash flows. Also, they don't have the maturity. They don't have contractual cash flows. Okay. So share price, of course, we buy the shares. The share price is more relevant for our investment. That's why shares, we always use fair value principle. Okay? Any question so far? No problem? Then for debt, we have two methods. First method is what? Cost principle. Cost principle. Second method is fair value principle. Okay? How to determine cost principle and fair value principle? Cost principle, we are going to only get interest and principal. Okay, so 100% for interest and principal. Okay, then the others we will tell you later. Okay, how about equity? Equity, we use fair value principle, but always when we talk about the shares, what's the first term you should think about? Ownership, right? So still the same accounting, even though we told you fair value principle, but we have to consider the ownership, because ownership means what? Your power in the company, right, will be different. So based on the ownership, we still will have a different accounting methods. Okay, so we talk about fair value principle when the ownership is lower. But how about when ownership is bigger? We have to use another method. So shares, when we talk about the shares, what's the keyword? Ownership. When we talk about the shares, ownership is the keyword. Okay, so right here you should understand. For bond, we have a 1, 2, 3 groups. For shares, we have a 1, 2, 2 groups. Okay, no problem. Okay, so let's look at bonds first. So bonds for cost principal, no problem, right? 100% for interest and principal. So we call it held for collections. Held for collections means we only want the interest and principals, okay? So you can also call it held to maturity. 持有至到期日。So for the first group, held for collections means you just only want interest and principal. So we use cost principles. Okay. So on your slide, page 22, since held for collections, you only want interest and principal. So it's short-term or long-term investment. Of course, it's long-term investment, right? Because we will keep the bond until maturity date. So it's long-term investment. Since it's long-term investment, you only want interest and principal. That's why we use cost principle. The fair value change, market value change doesn't matter for your investment. Okay? No problem? So which method we are going to use? Totally the same as before, right? Use effective interest method to find out your bonds investments book value. So we don't need to consider fair value changed because you only want interest and principals. So fair value change, decrease, increase doesn't matter for your company. Okay, so remember we use effective interest method find out the book value for each period. Then when we find out the number on our financial statements, here we earn the interest, right? This is the only thing you want to earn, interest. And don't forget, the number we report is what? Market interest rate, right? Effective interest method, we report the number is based on market interest rate. So how to get the market interest rate? Remember that contractual interest rate, then plus discount amortization. Okay? Because market interest rate is the true cost of borrowing for issuing companies. So that's for interest. How about for your investment, debt investment? Because we use cost principle, so the number will be the amortized cost. Means what? After amortization, what's the book value on your accounting books? So this number is what? Is after discount amortization. Okay, so the book value on your accounting books. So it should be book value after discount amortization. Okay, so it should be totally the same as chapter 14. The only difference is right now you are investors, you are not issuing company. No problem. Okay, so let's look at the second group. What's that? Fair value principles. So right now, the other debt investment, we use fair value principles. But fair value principles, we have two groups, two situations. Normal group, normal situation is what? Trading. Trading means what? 交易目的. Okay? Trading means 交易目的. So, what's your purpose? Your purpose is you just want to buy it, sell it. You just want to earn capital gain. So, for trading, what's our purpose? Our purpose is we just want to earn the capital gain. So, that's your short term investment. Okay? Why? Buy it and sell it immediately. Our only purpose is try to earn the capital gain. Okay, so you will buy it and sell it in short time. So of course, how the fair value changes is very important for your this kind of investment. So we use fair value principles. It's better to report this kind of investment using fair value. There will be more relevant, more useful information for your investment. Okay, so for this, it's like what? Like this on your slide 31. Based on the first day, your present value, then we follow fair value, right? Because fair value principle, we follow the fair value. So your fair value increase, you got the capital gain. Your value decrease, you got the capital loss. Okay? So what's our intention? Our intention is we try to earn the fair value changed. So this is your intention, motivation, right? Capital gain. Okay. So since this is your intention, capital gain, so we are going to report your gain or loss as part of your net income. Okay. Why? Remember, since you finished chapter 16, you should understand net income is very important because net income is going to report your company's performance this year, right? So, since that's your intention, you should report this part as your performance this year. Okay? So, that's why we report it as part of net income. Because fair value change is your intention. So that's why you have to report it as part of net income. Because net income tell you your company's performance this year. Okay? So that's your intentions. Of course, you have to tell your shareholders, users, your intentions, your performance also include this part. Okay? So you have to report its performance. Okay? So fair value changes. That's your capital gain or loss. Maybe you have a gain, maybe you have a loss. We have to include it as part of your net income. Tell users, tell shareholders whether your company did well or not for this part, since you want to use it to get the profit from investment, right? Okay. So after that, how about at the end of each period? Still, since we use fair value principle, so we had to report our investment based on fair value. So the fair value, how much? What's the value for your investment? We had to report it on our balance sheet. So for fair value, this number, you are going to report it on your balance sheet. Till then, the value of investment. Okay, so fair value principle follow the fair value. So you will find out the fair value on your balance sheet. Also, you have to recognize your capital gain or loss as part of your net income, because later we will announce our net income to tell users your company's performance this period, right? Okay. So based on the concept, what's the number we are going to find out? Did you find out interest revenue? Still, don't forget, even though we want to earn capital gain, but for the holding period, still we can get the interest, right? So you will get two money, right? First is what? For interest. So this interest is for holding period. So you will get the interest. Second part is what? For that, fair value changes. So this is your capital gain or loss. Then we report the fair value change, your capital gain or loss, as part of net income, right? So we put it into where? As part of net income. So they have to report before net income, right? So we put it into other income and expense, because if you still remember other income and expense, we put the numbers for what? For investing and financing activities. And Unrealized holding gain or loss is for fair value changed. We use this account. Unrealized holding gain or loss. Unrealized holding gain or loss. This is for fair value changed. Then we put it as part of net income. We use what? Dash, right? Dash income tell you we put it as part of net income. Okay? So means what? Since this is your company's intention, so you have the responsibility to report it and including it as part of your net income. Okay? Then how about your investment? Don't forget your debt investment. Right now, we report the fair value because we use fair value principle. So the number we are going to report is based on the fair value on the last day. So it's different. So did you find out even though for the same bond, if your company use cost principle, so the number will be this based on cost principle, 93,537. But when you base on fair value principle, then you should report the number on fair value. So will be different. Okay? So what number we are going to use based on your company's intention? You have different purpose, different incentive. Then the number you are going to use will be different. Okay? Any questions? No problem. Then how about actually the normal case based on accounting, we think should be have only two. One, two. Actually, we should have cost principle for held for collection. We should have fair value for trading. So at the beginning, we have only two groups. But because of some political problem, political issue, that's why we have the third one. But the third one, actually, I don't like it. I don't agree with the third one, this one. Because I think this one is more political issue. Okay, why political issue? You should understand accounting will use which method they will affect the number report on financial statements, right? How the number report on financial statement is very important because that's how the companies tell users, outsiders, the company's performance, the company's values. Okay, so use which method is not only about accounting method. Use which method they will totally affect your company's information to outsiders. So when we use fair value principles, means what? Means you have to tell them your capital gain or loss as part of your net income, right? So the number will affect your net income, will affect your performance. But you should understand the market value change a lot. So they will affect your net income a lot. Okay? So some companies think using this way will make their net income changed a lot. Some companies think if we include this number as part of net income, so they will what? Affect your net income. Change a lot. Okay? But you should understand market value change a lot. So they will make your net income change a lot. It's good thing or bad thing? When your net income change a lot, it's not a good thing. Why? Like your salary, you could think about it. If your salary each month, each year change a lot, so means what? Your company have higher risk because we are not sure next year you have good performance or not, you have good net income or not sure. So when net income change a lot, means what? Not stable. Not stable means what? The risk is higher, right? Like if you told me you made a salary $20,000 this month, next month $50,000, next month $100,000, next month $10,000, your salaries change a lot. We think it's too risky because we are not sure how about next month. We cannot predict, we cannot expect what's going on in the future, right? So the problem is when fair value change a lot, they will affect net income a lot. Okay, because of this, some company want to protect themselves, so they persuade accounting to give them some exceptions. Okay, so the third one you could think is a more political issue. Some companies don't want to make their net income change a lot, so they asked accounting to give them another category, another group. So what's another category, another group? They told you, my investment not held for maturity, but my investment not sell in short term. So they told you, oh, we are in between. So what does it mean in between? We want both. So the third one is what? They told you, held for collection and selling. So what does it mean? They told you both. We want interest and principal, but we cannot promise this. We won't sell it. We still will sell it maybe in the future, but not today, not in short term. Maybe in the future, but when? Oh, I cannot tell you. So did you find out they told you, oh, I want interest and principal, but maybe I will sell it in the future, but not in short term. What does that mean? You know, it's like I told you, I really like you, but we are not boyfriend, girlfriend yet. But who we are, let's wait and see. So it's like, this kind of, what kind of companies is like this way? I want interest in principle, but maybe in the future I will sell it. If I find out I could earn a lot of capital gain, I don't promise I won't sell it forever. In the future, when I find out I have a lot of capital gain, I still will sell it. Then let you guess what kind of company, if we use this way, put fair value change as a part of net income, what kind of company will be affected a lot? What kind of company do this kind of investment a lot? What kind of company? Bank, financial companies. Why? Financial companies, what's their major activity? You deposit the money into the bank give you the interest. Why? You deposit the money into the bank give you the interest. Everything about interest means what? The bank borrow money from you. So when you deposit your money into the bank, means what? The bank borrow money from you. So that's why they give you interest. Then why? What's the reason they got the money from you? What's the purpose they have the money? They use their money to do investment. Even though like an insurance company, you pay the money to buy insurance. Do you know when insurance company got your money, what's the next? What they do? Investment. So insurance company still, they sell the insurance to you, but what's their major purpose? Insurance company's major purpose is get your money, use your money to do more investment. Okay? So for financial companies, for insurance companies, their major activity is do investment. Okay? So they do a lot of investment, but they are afraid. If we just use fair value principles, we put the capital gain as a part of net income. You know, fair value change, market value change a lot every day. So they are afraid their net income will be affected a lot. So that's why they do the political things as accounting, give them another case, another exceptional treatment. So what's that? Okay? They said they want to put their net income, their capital gain, fair value change in OCI. So that's the exceptional case they want. They asked accounting to allow them put fair value change into OCI. Now maybe you think, what's the difference? It doesn't matter if we put it into OCI. So what does it mean when we put the fair value change into OCI? OCI means what? Other comprehensive income, right? So where you can find out OCI? On your slide 37. Okay? Net income. After you got net income, then we have other comprehensive income. Remember that? So other comprehensive income, they ask you to allow them put their fair value change into OCI. So did you find out equity? Dash equity means what? Dash equity means allow them to put fair value in OCI. So OCI, other comprehensive income, the number is after net income. Okay, after net income. So means what? Which number we are going to report, tell users your company's performance, net income. So they avoid this part. Is part of net income. Okay, so when we are going to report net income, will not include this part. So use that to remember compute EPS, then report company's performance to outsider. Okay? So the purpose is okay, I know I have to use fair value principle because I'm trying to earn the capital gain. But please don't ask me to report the capital gain as part of net income because they don't want to affect net income. Okay? They try to make their net income stable. Okay? Stable means what? Risk is lower. Okay? So for financial companies, for insurance companies, they do a lot of this kind of investments, but they don't want to make their net income change a lot. So they ask accounting to allow them put the fair value change in OCI in case their net income change a lot. Okay? So that's our purpose. So they tell you, I want to earn interest principal, but maybe in the future I still want to earn the capital gain. But in the end, what does it mean? They don't want to take the responsibility. Why? Because since you want to earn capital gain, you have to take the risk, right? But they don't want to take the responsibility. They don't want to take the risk. So they ask accounting to give them exceptional case. Okay, so that's what the result right now. Okay, to protect financial companies' net income, to protect financial companies' financial statements. Okay, so on slide 38, here told you they want to minimize the volatility of net income. Of course, so that's why they don't want to put the fair value change as part of net income. They put it into OCI. So they put it into OCI in order to make net income stable. Especially for which company? Financial companies. Okay, any questions? So the major difference for second group and third group is what? Is second group on your slide 34, on your slide 34. For second group, your fair value change in net income. For third group, Your third group, your fair value change in OCI. Okay? Well, you should understand the third group is more political issue because the financial companies want to protect their numbers. So they ask accounting to do that. Okay? Originally, at the beginning, we don't have the third group. We don't have. But because of financial companies, that's why the third group came out. Okay? Then take a break.